Alrighty, traders. This is Blake Morrow. I'm glad you guys can join in today. It seems like we're having some email issues with the login for this webinar. So our attendance is down a little bit more than normal. I've had a few people report to me, so that means there's a lot of people that aren't getting this email that comes in from Zoom. I don't know why, but we're gonna work on it. Hold on one second. Oh, give me 1 second, guys. Just need to grab my water and grab a drink.
Blake, there is not much, unfortunately, we can do. On a rare occasion, it happens. I didn't get the email either, but I want to remind everybody that the login information don't change. I mean, it's the same, so they shouldn't be really worried about it. Plus, they have the ability to log in by clicking on the platform on the widget, right?
Yeah, I actually sent out a bell icon or notification right here that that you can log in. You know, so you can log in right here. So hopefully you guys are getting that message, and hopefully everybody gets logged in. It's not, as you said, it's not a normal thing. Zoom is not. They're good, but they still have obviously some flaws as a newer company as well. So, growing pains, I guess.
Yep.
Growing pains in a COVID world. All right. So what I'm going to do really quick is I'm going to cover, since it's fairly slow out here. I'm going to cover the markets and go through the bias chart. I do want to point out though, the Aussie yen, if you guys missed the pattern in play, I just put in an Aussie yen short, and here's the reason why. We just hit the 161% extension of this move here from the highs back in August to the lows back in October of last year. We just hit the 161% extension, plus we hit 161 or close to 161% extension of the last move lower. Relative strength is divergent. We're overbought. So I'm taking a shot at it here. I'm not risking very much. You risk about 30, 40 pips, depending on what your tolerance is, for a move back down to 80, maybe even lower. So, to me, it's worth the risk reward. It's counter trend. So I'm taking a relatively small position. Hold on really quick. Just started. Hold on. Trying to make sure everybody's logged in. Okay.
Also, Blake, just a small tip, because on a very rare occasion this with the link is going to happen. I know that from experience, and there is nothing we can do because these emails are handled by Zoom. What I always personally do is that I always keep previous day's email, and I delete it when I get next day's. So people can also do that, so they can always have easy access.
Yeah, I mean that's something. Yeah, because the link doesn't change. Like I use the same link every day to log in.
Exactly.
You guys can do that too. Just when you have an email, just keep one in a separate folder. So this way you always have the link, so you never miss a beat.
Or they can just flag one of those and keep it, so it's easy to find.
Right. Okay. All right. So great. I'm gonna get started. So again, apologies for those of you that didn't get an email today. If you're scrambling around, it's it's an issue with Zoom. It's not something that we have control over today. So just letting you guys know that. All right, let's talk about the euro. So the euro, a couple things to keep in mind here. Now we are obviously rejecting the 50% retracement. Got to keep that in mind. Same issue that we had on Friday. So I'm going to write that down. 121.50, 55 basically. All right, support is going to be right here at 120.80. Nothing's changed, but we need to pay, a little bit of attention just in case we get, in the next couple of days, just in case we start seeing this develop. Okay. And that means that if we build a right hand shoulder or right shoulder, excuse me, we can go farther than where we're currently at. We can drop all the way down to 120.50 and still be developing like an inverted head and shoulder pattern. It's some food for thought. I am not married to the idea that's what we're doing. I am married to the idea right now that we are in a range and we're in a pretty tight range. So we can do this. Kind of see where we're at right now. I think this is what we're dealing with currently. So don't get too terribly, I didn't want to grab that. Don't get too terribly excited while we're in this range. Okay. All right. Just know that it's there. One thing that we have to also think of is stocks are really strong. The dollar is weak today. Yes, it's weak, but is it like really, really weak? No. I would have thought the dollar would be a lot weaker in this environment. So, and it's not. So just think about that moving forward. Okay. All right. Cable is strong. Now we have a bull flag pattern that actually, or, bullish pennant flag that we're getting close to completion here. You can see there's the flag. To complete, we would reach for basically 139.60. Okay. I think that's where we have to look at next. I know we have, a high today of 135.15. And this is the one thing that could continue to drag down the dollar is this move here in the cable to 139.60. Okay. I think that's going to be an important resistance. We are in a bullish trend. And now dips to, let's go over to an hourly and so dips to right here should be very well supported. I know we have some spike highs, but I would be looking right towards this low. We should not get past this low right here, which will be 138. Let's just call it 138.45 roughly. Okay. All right. Jack says, I never use the email. The link button on the ForexAnalytix website is very convenient. No issues with emails. Yeah, I to log in, if I had to log in every day, I would just log in right here. Yeah, that's because I use ForexAnalytix and I'm religious with the risk management tool, which we can talk about at some other point. But that's something that I use all the time. All right. Anyway, let's go over to the Aussie. So the Aussie. So we broke through this resistance, but again, I'm going to have to point out, with the Aussie as bullish as we are, the question we have to ask, or excuse me, with stocks as bullish as they are, the question we have to ask is why isn't the Aussie at new trend highs? Here we are struggling at another resistance level, so we can just actually mark this up. This is our 88. Not even 88% retracement, but more horizontal resistance. And that comes in at 77.85 roughly. So we're going to mark that down. And I'm not going to put us in bullish right now because it really is kind of lagging. Okay. Support though, for the Aussie, I can't get really excited about any possible downside, but I'll say this. See this high right here? It's over this spike high right here. See how we've, basically our dips of the last previous dip that we had held at 77.50. So I'm going to write down 77.50 as being intraday support. It's not great support, but it's support. And if we break that, then we have to start looking at this, 77 cent level. So is that 77.10 or 77 cents? 77 cents. So I'm going to write down both. Okay. All right. Kiwi. Now the Kiwi's heavy. Now I know you guys might be saying, well, it's the Aussie New Zealand, and I'd agree with that. Actually, the Aussie New Zealand is extremely strong, but that doesn't stop the fact that it doesn't change the fact that the Kiwi is really struggling every time we make a move to 72.50. Okay. So support right now is going to be 71.80. You can see how it's that broken trend line. it's really going to come into play. It's in this, upper sloping trend line. It's probably going to come right back into play at 71.80. So 72.50, 71.80. Okay. All right. Dollar Canadian. The dollar Canadian is trading a little heavier. Like I said, my stops are really close. I have my stops below this channel support. But I moved them up with the pattern in play just for protection reasons for people that don't, watch these webinars. But I think the dollar Canadian could actually stretch down towards the 126.40 level today, especially if the cable continues to move higher. So $126.40. I think that while we're below well, this should be intraday resistance, especially on a day like today, 126.80. But I think if we break above 126.80, it would tell us that, we're turning back towards the, upper end of this channel. That's not the case right now. And remember that we haven't really moved a whole lot in the last 12 hours. I mean, we kind of gapped down, or, I guess you could say it gapped up in equities and kind of moved to where we're currently at. And we've just been stationary ever since Asia. Europe hasn't done a whole lot either. Swissy. So the Swissy for now, we're going to mark up this resistance here. Well, you can see it right through here. Let's grab, you can see that resistance zone, right? That's going to matter. So the top of that zone comes in at, it's just 89.50. This support is 88.90. $89.50. US dollar, Norwegian krona, right back down to the 88% retracement. It's actually holding as support for right now. But horizontal support is holding. I still think that the US dollar, Norwegian krona is actually building a nice base. And you're seeing it get a little bit of a lift right now because crude oil is starting to roll over, which we can go back and reference that a little bit later. Actually, Steve might. So brief new low. Possible false breakdown here. Can't get too excited about it until we get back above 852, but support is at, 840. Okay, I'm going to keep us in range there. US dollar, Mexican peso. So the US dollar, Mexican peso is holding the 618 retracement. That's something that we should really be paying attention to. So we'd have to break below 1985 in order for it to turn bearish. That's going to be important support. Resistance right now is going to be right here at 2010. Okay. I'm keeping us in range here. US dollar, Japanese yen, a lot stronger than I thought it was going to be. I actually hope it rolls over now because I shorted the Aussie yen, but that's just, me speaking out loud. I didn't think we would actually break this 105.25 by this time already. So what we're probably going to have to do is just realize that this is really key resistance. Remember the false breakdown or breakout from last week. Okay. So that means that 105.75 is resistance. I think we'd be really lucky if we got back down to 104.85. So $104.85, and then up here is 105. 575 is resistance, and that's going to be key resistance, by the way. Okay. Let's go to the dollar index. Now, remember, the dollar index, a lot of this weakness right now has to do with the sterling, with the pound. Okay. But what we are doing is we are holding this horizontal support. Remember, this is like channel support. We still have this. If you recall my analysis, I'm not going to be real bearish the dollar and while we're above this inverted head and shoulder pattern right shoulder. So intraday support is right here at 90.25. And then resistance obviously is right here. That previous spike high is going to be 90.70. I can probably write 90.75. Just to round it out a little bit. Okay, remember the stock market's closed today. So if you're like, oh, why aren't stocks really moving? Well, that's why. It's President's Day. All right, gold. Now, gold is trading a little heavier. I would have thought with stocks moving higher, dollar moving a little lower, you got a bid in the Aussie, bid in the Kiwi earlier, at least in European trade. I was wondering why silver and gold haven't gone very far, but here's gold, and you can argue that we're consolidating here, right? I just don't know where support in gold is, because if it's like this, then we're really getting close to support, but I kind of don't really think that. But I do think 1810 is going to be the spike low here. You can see all these, spike lows through here. You see them all. That's going to come in around 1810. So let's just go ahead and mark that up for now. Now, I know this is triangle resistance, or at least trend line resistance, but, this should be pretty good resistance on any bounce. That comes in at 1830. Oh, we're consolidating in gold. All right, and we're going to look at the S&P, since futures will move around a little bit, but I'm more concerned with moving forward. So, like tonight, 4,000 is the 161% extension. See it here. Okay. And while we're above 39.30 roughly, we got to stay bullish, right? So 4,000 is obviously very key resistance. And that would put us up for the year. I'll move up to there. January, let's go to January. That already put us up 6.5% for the year. Okay. So dollar Mexican peso is making a little bit of a move, huh? Interesting. Yeah. I mean, it's stronger, surprisingly stronger. So anyway, that's it as far as your bias chart goes. It's pretty quiet today. I'm going to spend the day, it's President's Day. I'm going to be doing a few things, personal things around the house, nothing, super crazy. Today is a holiday for the US, but I wanted to make sure that you guys got analysis and, and you guys were taken care of for the day. But tomorrow we'll be back in the saddle. Looking forward to it. And Steve, Stelios, I'm going to turn it over to you guys and see if there's anything that you wanted to cover for the folks here.
Thank you, Blake.
Thank you, Blake.
Focus
Thanks,
is still on cryptos and our
I'll see you guys in the chat room.
Thank you, Blake. our friend Didier, or as Blake would say, Didier, is saying, would you argue that money is going into cryptos instead of gold, thus it's not squeezing? I think that's a very valid point. And focus has been on cryptos for weeks or months now, but definitely last weeks has been very much in focus, and you're seeing institutional names going into it. So yes, I think that's a very plausible answer to what we're seeing. Yes, Didier.
Stelio, how many people do you know that actually have invested or in general, are interested in investing in gold?
Oh, in gold, quite a few of my friends actually. But I also
Okay.
know I actually have
how many of them would hold some of that money to put it in cryptos instead?
Very few. I have one friend who we're classmates with at university who's been collecting gold coins just like I am, but he's been going in and out of Bitcoin and a couple of altcoins, and he's made a fortune. Not a fortune. He's made really good percentage-wise gains, but he only risks a little bit because it's the old saying, risk what you can afford to lose.
Would
So
he own more gold if he wasn't trading in and out of Bitcoin? Sorry, less gold, I mean. Sorry.
No, because the size that he's trading in Bitcoin is a lot less than the gold he has.
Yeah, in any case, my point being, I personally don't know anybody that invests less in gold to buy Bitcoin.
You're talking about retail people like me and you, but I think Didier is talking about institutional investors, and we are seeing big names talking about going into crypto and getting some.
Yeah, but which of those names own or in general have been well known to be buying gold? That's a question. I mean,
I don't know. Argument, I really don't know.
My argument here is I'm very skeptical about how competitive these two markets are. You know what I mean?
Yeah, for many people they are. That's many people are saying, look, I'm diversifying. I want to own real assets, but I want to own Bitcoin as well. You can't argue with that. I personally am not, but I can't argue with it, because obviously who knows how it's going to evolve. I guess you only invest or trade what you feel comfortable with and what you feel comfortable losing. And that's the main thing.
If only people actually did that, we wouldn't have bubbles in the history, because the vast majority of them are built on the frenzy of people that are actually investing money that they can't afford to lose.
That is very true. That's very true. Anyway, that's the
sorry, I was enjoying a little bit of spanakopita.
Yeah, nice. Yeah, that's the talk of the week or the month, right? Cryptos. That's what everybody's talking about. And our friend Alexander is saying Elon Musk said he bought some Dogecoin for his baby son, whatever it is, and it hits the news straight away. And Dogecoin is going up 50% or whatever it is. It's crazy. It's like just because somebody's doing something, it doesn't mean that everybody has to do it. But I guess there's a lot of influence.
Doge USD. So this is it. So it's trading like at 6 cents, right? 6.3 cents at the moment. Yep. Of course, it was trading at 0.8 cents before Elon Musk pumped it.
Yep. Funny how this kind of pumping is not being addressed by any regulatory body, right? Anyway, it's a long story. That
try doing it, and I'll tell you. Try doing it in a forum or whatever.
Yeah.
And somebody giving you in.
You saw with that guy Nav Sarao a couple of years ago, he was doing this thing that all the algos are doing, this bank algos, spoofing here and there, and of course he was taking money off the banks, so they made sure he got prosecuted and everything.
Prison sentence.
Of course, that's the way it works, man.
Mm-hmm.
It's like the mafia. You get into our territory, we're gonna let you know it's not right.
Exactly.
Yeah.
Okay, so another development, Stelio, is USD NOK seems to be breaking down from this recent bear flag. So this is something to note. It's actually testing previous lows.
Yeah.
I think we have one more low here, and despite the divergences we've been seeing, I think the same thing applies to USD CAD. Look at USD CAD, not only about to test the lows, but holding the descending channel, and the RSI seems also to be breaking down from this support trend line. So I think that before we see a big rebound, probably all these pairs need to produce a lower low.
As long as oil is staying around here, in the
Of
60s
course.
or whatever, then we're going lower. I think.
Yes. Now, I'm not advocating that somebody should chase them lower. I mean, I'm still short USD NOK. I'm extremely deep in the money. So, I'm happy with this development. Would I be selling USD NOK today? Perhaps, if I had to hold it for a couple of days, but would I be selling it here to hold it like for many days or weeks? No chance. Same thing with crude. Is crude bullish? Yes, it's absolutely bullish. Would I be buying crude like right here? No, I think it's a very dangerous proposition. It's a market that has moved quite far and is susceptible at any given point in time to start a decent correction lower. Now, as I've said before, we don't know what the trigger is going to be, but risk assets and everything that's correlated with them should sooner rather than later turn lower for some type of a sharp correction. And I'm saying sharp, and I insist in using the word sharp because we know that these type of markets that are constantly non-stop bid, usually when they finally put a decent correction in, it always unfolds fast. It's never slow and steady. It's almost always fast and rapid.
Yes,
so my assumption is that in this case we're going to be seeing the same thing. Keep in mind that the VIX is also breaking down from this ascending trend line support. It is slightly still above the November lows, intraday lows. But there is a very good chance that today will close at there is a good chance that today, if it stays near the lows, it can actually close at more than 1 year lows. So, that's, quite important. But of course, as I said before, if it closes near the lows, right? Because on a daily closing basis, we haven't seen VIX lower than this since the gap higher that it produced at the end of February of 2020. So, from the VIX perspective, that's quite an important milestone in essence, producing a lower close than it has since that day that the market woke up to the reality that COVID is actually a real threat to economic to the economic progress, so on and so forth. DAX also remains well bid. The FTSE is doing a good effort here as well, still lagging in comparison to the US indices, even to the German one. Shanghai, new highs. Nifty, new highs. FXI, new highs. Emerging markets, new highs. Look at this, testing now the 127% extension of the corrective move lower we had, which started at the beginning of 2018 and bottomed out, guess when? When, in essence, the financial markets bottomed out. So look at this massive rally in emerging markets, right? We are at, we've actually now, have we? Yeah, we have actually surpassed the 2007 highs. So we're talking about a massive move higher. And in my opinion, there's going to be a lot more to it. Now, when I say there's going to be a lot more to it, the same thing that I said about the rest applies here, meaning, should you be buying it like here? Absolutely not. Look at this persistent RSI divergence as well, right? RSI is diverging since we were here at the beginning of the year. And we're a lot higher and the RSI is still diverging. We're also testing the 127% extension of that corrective move lower, as I said before. So, I think you should be careful. We're getting closer to seeing some type of a corrective move than seeing another explosive move higher, most likely than not. A fast look at the FANGs as well, which have broken out, from this corrective consolidation. Now, I wouldn't characterize the move out of it as explosive, but in any case, it is a valid, breakout. So, it is what it is. Notice the S&P testing this channel's trend line resistance once again. So, I don't want to reiterate the same thing, but you should be careful. Don't chase these markets. I know that there is a lot of FOMO, but I don't think you should participate in it because it's a dangerous proposition. Having said that, the Aussie, has established itself for a couple of days above the flag. The same thing with the Kiwi, although so far, there is no follow through. So it's completely unimpressive. One reason for that, probably the main reason for that, is because the USD yen's move is stealing the thunder out of the USD pairs, and in essence is passing that through to the Kiwi equivalent pairs. So to the Aussie yen, to the Kiwi yen, those of you that were trading back in the previous big bull market in USD yen, you must remember we had that for a very prolonged period of time, meaning, these markets against the dollar, these currencies against the dollar were more or less not doing much, while at the same time they were exploding against the yen. So, that was sucking out some of the strength versus the dollar, a lot of the strength actually versus the dollar, because it was directing it almost all in the moves against the yen. So, for me, it's a rather familiar type of move. I mentioned that also on the webinar, probably 10 days ago or whatever. I mean, the possibility that if the USD yen starts actually reliably moving higher, you should start looking more for moves to unfold in the yen crosses rather in the dollar crosses. So keep that in mind. Now, since we were talking about the yen, the same thing we've had here with the euro USD, meaning that it has broken out, but hasn't really produced a significant follow through. The same isn't that much the case for euro yen. As you see, there's more strength here. I'm watching this. Perhaps that's not the formation, as an expanding triangle. Watch out the 61.8, the long-term 61.8 passes from 128.70. We might be targeting that area, but I would be a little bit careful, when we reach that. I would definitely be a little bit careful. And I already showed in the first part of phase the quite explosive move we've had in the pound yen. Keep in mind, if you look at the big picture in the pound yen, this might be a really, really big breakout, because we've in essence broken out from a channel that's lasted for 3 years. Yeah, 3 years actually. From the end of January of 2018, we've been in this channel, and we actually broke out at the end of January of 2021. So exactly 3 years of a move. So keep that in mind. Let's see, it might be the beginning of something much bigger here. Next upside target at 148, by the way, and you should consider this area at 143 support from this point on. So probably dips towards that area whenever we get one. We'll find more than willing buyers to actually participate in these markets. Steve, could you draw a line, US oil weekly chart coming from 2009 highs through 2018 high, approximately tested it today in my charts? I think it's better if we go to the weekly then to do this, so we can have the bigger picture. 2009 highs, which is that one. You mean 2008 highs, probably then, right? Because it peaked actually in the summer of 2008. Yeah, there is still some distance. If we're looking at the same chart, there's still some distance. Not a lot, though. It is an interesting trend line. Passing from 3 points already, so, you know, rather valid one. You know, from what I see here, we have a little bit of distance for the time being, except you wanted me to pass it from here. So if I drag it down there, although we're overlapping this peak a little bit, then yes, you're right. But you know, the question is this the way to draw it, or is like that the way to draw it? You know what I mean? So, you know, in one case, yes, we are exactly at resistance. In the other case, we have like, you know, $3 of more upside to that trend line. But yeah, it's a good point. I mean, it's a good trend line to watch and monitor. But in any case, I do think that crude oil should not have a lot more upside before it, you know, it finally puts in some type of a decent correction, Dimitri. Isn't oil seasonal, so peaks in February, then sells off? It has a tendency to have seasonality, but you know, I never trade only on seasonality because, you know, I mean, you have years that completely opposite things happen. Now, I do understand that there are people that trade several markets at the same time, all based on seasonality. So the logic there is that, you know, if you follow seasonality patterns in many markets, you know, you're going to catch like the move in many of them, even if one or two don't play ball, some of them will. But personally, you know, seasonality trading was never for me a factor to, I mean, I'll take it into consideration if I'm taking into consideration multiple factors and looking to enter like medium to long term. But other than that, no. If I can look at French stocks, yeah, absolutely. Yeah, clearly lagging, right? Not at all-time highs, still some distance from all-time highs. That was an easy trade here. This one. That was an easy formation to play the breakout. Textbook, and look at how it exploded afterwards, right? Now, having to do with this formation here, can actually be an ending diagonal. You know, sometimes they can be expanding diagonals. Look at the RSI divergence as well here. Very, very, very clear, reliable one. I mean, you know, last high for the time being is even below the 70 area. I would be very careful here. I think it's already run, you know, I'm not going to say it's run its course, but it seems to have run, you know, big part of its course. So, you know, I think that it might be almost at resistance as we speak. Yeah, so I would pay attention to this. As the rest of the stock indices, I think they're stretched, very, very, very overdone, and sentiment is extremely one-sided. So I would be very, very careful. I mean, we can discuss buying it once we get a decent pullback, but then the next question I would ask is, why would you, I mean, if you want to get involved with risk assets, why would you want to get involved with one of the indices that has been lagging so far? You know, many times there is a good reason for something to be lagging, right? I don't know the specifics of the like French stocks and the 40 companies that participate in the index, but they clearly lag the DAX, for example. So once we get a decent sell-off in equities, why not buy the DAX instead?
Steve, we have to close because we have Trufa starting.
Oh,
in 4
yeah,
minutes.
you're right, Celio.
Okay.
You're right. Okay, so we wrap it up. Mondays, Thursdays, we have the Spanish webinar, and back tomorrow for whatever else you need, guys.
Thank you, everybody. Thank you.
Bye-bye.
Bye-bye.